But if we look under the hood and we can see what's driving in used cars, really what we're saying is semiconductors, right? It's all about the chips. And they're not able to produce a lot of vehicles. And then you throw in the geopolitics with the Ambassador Bridge in between Detroit and Canada. What's that, Windsor, across the river? There are a lot of car parts that move back and forth. All of these continue to put prices, and used cars have really come in there. And I've seen some price increases on the top models where we can see it. They're mainly low end models, as people are trying to just get cars that are affordable. But at some point, this is going to clear, and that's going to help that CPI number. And I think we're getting close to that. And we're going to look at some numbers on shipping and supply chains. But one thing I would point out, so I'm being optimistic about supply chains, is that I don't think prices are actually high enough at the moment with these supply chain disruptions, because down in Naples, the local news channel was talking about how there was a shortage of flowers on Valentine's Day. Well, that shortage means the prices were not high enough. I know a lot of people don't like to hear prices are not high enough, because they certainly are higher than what we're used to. But if we're not getting a shortage, that means supply isn't able to meet the current price, and you either need to increase the price or you need to increase supply. And let's hope that it's an increase in supply. And then there is one number that I think is artificially low and will remain artificially low, and we've talked about that. That's that shelter for CPI, that it's rents equivalent. We've seen a little bit of movement on that, on what people would report they would rent their house out. But if we were actually looking at prices of homes, the CPI would be much higher than what it has been.
Yeah, 4% gain on shelter is on a 12-month change. It's laughable.
Right.
Maybe we'll see that one going up, and used cars and trucks coming down. Yeah.
So then, go ahead.
I was just gonna say, looking at the ocean freight that we discussed, and two of the big ocean freight players, Maersk and DSV, did report earnings, and they're in line. They're still sticking with the consensus that second half of this year is when they're going to start seeing improvements on some of those supply bottlenecks. But as far as the data, it's, kind of could go either way. If you're saying, is it improving? So if we're looking at just reliability staying on schedule, that yellow line is 2020. You can see it decreasing significantly. And then into 2021, there was some improvement at the beginning of the year, and then really kind of just petered out. So, but in terms of days, shipping days delayed over the last few months, we have seen that come down, by about a day. Improvement,
It is an improvement. I think I think we're past the peak, barring, let's say, China closing more cities because of the Omicron or whatever new variant is out there. That's possible. They are hosting the Olympics right now, so who knows what could happen. But it seems that the supply chains are beginning to open up. There's a lot of backlog to work through, but I think we've seen the peak of that, and that's going to help if we get this start going the other way. That reliability to increase, some chips coming back, and these supply chains opening up. Obviously, the geopolitics that we started off with in Ukraine, if there's a hot war in Europe, that can absolutely disrupt this. But it seems that the cause of this, which was the COVID variants and the COVID virus, that's beginning to really to show improvement, and the supply chains are starting to slow. And in addition to that, the amount of money that was created by the United States government to get us through that pandemic really put a lot of demand on imports. So if we're not doing as much stimulus anymore, that should also reduce some of that. But we've seen a lot of retail movement and sales in January.